want to talk about PanJam now, because the group seems to have had a pretty good second quarter, which ended in June. So give us the highlights.
So Pan Jamaica Group, combination of Pan Jamaica and operational Jamaica producers, it would have seen a 5% increase in revenue up to $9.5 billion, but with the higher operational expenses and their subsidiaries, alongside a relative reduction in the share of profit from its associate, the largest one being Surgical Group Jamaica, we would have seen a 2% reduction in the net profit attributable to shareholders to $1.05 billion. Now, it sounds a little, sad to hear that, but remember, different cycles and the nature of Pan Jamaica Group's business or its diversity is going to create those peaks and troughs and those erratic periods. So in their case, they recently sold the joint venture business in Dalmore that they did with Norbrook Equity Partners. They bought a new business in Belgium under the juice business on the June quarter, and they're just holding on to a lot of cash and capital across the group. So as it currently stands, you're talking about $3.8 billion in cash, and then you have another $11.9 billion in repurchase agreements. And this is also against the backdrop of the fact that they can pick, choose, and refuse what they want to acquire. So what do I mean by that? So they can readily acquire any business with the cash on their books, even from the perspective of some of that cash being at some of the subsidiaries like Kingston Wharves, but still it speaks to the depth and scale of this overall group. And they just increased their dividend by 25% from 10 cents to 0.125 cents. That record date is for next week Friday, payable in September. But pretty interesting group. They mentioned that they sold some property during the quarter. They also, under the property segment, they also mentioned that in the financial services segment, Surgical Group Jamaica, where they have a 30.2% stake, would have had a pretty rough quarter based on all the developments that have taken place. Otherwise, for the most part, it's a pretty interesting holding company, pretty large depth and scale and size. And when you think about it, it's the company that has the largest stake in Kingston Wharves, 42.7%. They have the second largest stake in Surgical Group Jamaica, 30.2%. They are, I think, the fifth or sixth or seventh largest shareholder in JMB Group with about 2.5% stake. And they also have this very diverse range of securities on their books, portfolio and properties. So interesting business. Looking forward to see how this JP infusion will further accelerate the business going forward, because the JP Snacks Caribbean business is actually back to profit. So good things going forward, basically.
I have a question from Roswell. Roswell says, PanJam paying 10 cents in is it 10 cents or 0.1 cents in dividends? There is better in other companies. Oh, it's not a question, it's a comment. There's better in other companies from a dividend standpoint.
It's not really a dividend company at this point, in all honesty, because the thing is, Surgical Group Jamaica pays most of the dividend income that they can then distribute to shareholders. But you have to remember, they would have just done the amalgamation of Jamaica Producers, which was a share transaction for assets. So the Jamaica Producers transferred their operating businesses into Pan Jamaica Group for new shares. Those new shares has caused the number of shares in Pan Jamaica Group to also increase. So had you not seen that increase in shares overall, you probably might have seen the dividend be at 30 cents per quarter or something like that. So in this case, it is showing that when you have more shares, you might pay the same amount nominal in dividends, but the per share amount might go down.
So let's take a look at the economic climate going forward. So given PanJam's recent performance and the economic climate that we are currently in, what is the outlook? What can we expect from this group in the coming months?
Well, they just expanded a little further into Europe with the acquisition of that new juice business. But otherwise, I think it's going to just be touch and go to see what opportunities they take advantage of, because they have property in Montego Bay, I believe by Freeport. But people from NEPA didn't start it, luckily, especially what happened with rates and construction costs. And they are planning to potentially sell some land in Norbrook as well. So, likely to just refocus part of the business, bring more capital on book, and just, realign themselves to growing the operational side as well as the private equity side of the business as well. That's where I kind of see it.
Okay. Well, thank you so much for that update
One
on
last-
PanJam as well as on the BOJ's recent interest rate cut. David, you say you have one more thing to add?
Just on the same BOJ cut. So the one benefit, of this initial cut is that you're likely going to start seeing some trending downwards in the treasury bills and CDs, which is good for companies that have variable rates that are tied to these instruments. So that's an example of companies which would benefit from the reduction in interest rates by the BOJ in turn. What you're going to probably see now is that also these fixed income instrument offers are going to get greater subscription going forward, because if you're coming on Kalilah, that means that the interest income of fixed income instruments is going to be lower going forward. So we're still going to try and secure quality assets or quality fixed income instruments going forward to actually lock in those higher rates going forward, because the stock market likely can rebound, but at the same time, a person that do want that stability in income, they're probably going to really take advantage of these 10-11% rates we offer in the market. We have NCA Financial Group bond closing next week, and maybe a new bond, closing in mid-September. So just a point to add.
All right. Learn, Grow, Invest says, so you're saying now is the best time to buy a bond? I would think so, because you get to lock in the rates while the rates are trending down.
So if it's a quality business, you're in a good position because you're getting a locked-in rate. And the thing is, let's just say you get 10% today, and in 3 years, the market is offering 5%. You'd at least benefit from having that guaranteed 10% going forward before you have to reinvest in that period. But you're going to likely see persons capitalize on not just refinancing their debt, but just investors also just capitalizing on these higher rates in the market, because it's high interest rates, how they slow the economy, it does bring in higher interest income or income for businesses that invest in fixed income instruments like pension funds and insurance companies.
All right. Thank you so much, Dave.